So we know with the CARES Act that they're going to be doing a forbearance. A lot of confusion out there. What's the difference between having a forbearance and a forgiveness for your loan, your mortgage?
Well, let's start with the fact that, and I know I've seen a lot of the Q&A back and forth from a lot of different people, and hopefully this message gets out there. This CARES Act COVID-19 forbearance is not a forgiveness. You have to pay your payments when this is all over. So this is not a free pass. So you will have to make your payment. So just for instance, I just do really quick math. If you have $1,000 mortgage payment and you request your forbearance in April, May, and June, then that's $3,000 that they've given you forbearance on. But when you come to make your next payment, so your July payment, you're going to owe $4,000, right? Because you're going to owe for April, May, and June, and then you're going to owe your $1,000 in July. So I just want to make sure everybody understands that this is not a forgiveness. It's not a freebie. You do have to pay that $1,000 back for the period of time that you've been granted forbearance. You know, the timeline for this forbearance. I mean, you're going to be granted up to 180 days with your initial attestment, and then you could be potentially given another 180 days after that, but no more max than a 12 months. Forgiveness through this, or not forgiveness, for this forbearance through this forbearance program through COVID-19. There shouldn't be any impact to the credit for the homeowner. When they're going through this process. So, for instance, if we're taking April, May, and June into consideration and it's approved forbearance, there should not be a negative impact to your credit. But when July comes and you don't make that payment of $4,000, then there could be a negative impact for sure to your credit. Okay. Now you need to contact your servicer, because each servicer is going to set up a couple of different ways that you may have to pay that extra $3,000 back.
Yeah, that was going to be my next question. How do you pay it back?
Yeah, and it's going to be left up to the servicer. So I would encourage everybody to contact the servicer. And if they're going to attest to forbearance request and it gets approved, then make sure they're asking the servicer these questions. Like, are you going to make me pay it back all at one time? So if I get approval for, April, May, and June, in July, am I going to have to pay back the $3,000 plus my mortgage payment of $4,000 at one time? Or are you going to take that $3,000 and instead of making me pay it back in one lump sum, would you only make an adjustment to my payment of $150 or $200 a month for a period of time that $3,000 is going to be paid back? You need to know that. And then they may decide, at the end of the day, let's just add it to at the end of the loan, right? So if you pay back if you sell your house and you pay back the loan, then that's when that $3,000 would have to get paid back. Or if you refinance, then they may allow you to pay it back, or they will require it to be paid back at that time. So there's a couple of different ways that they may look at doing it. If you're really in true hardship, then you're probably going to be looking at some type of true loan modification. And then at that point, they would add that $3,000 to the loan and restructure your overall note, payment, everything. So that's for those. Obviously, that would be in a situation where they really do need hardship. They really do need a modification done, and they would just apply it to the back end of that loan.